Well, hello and welcome everybody back to Man and Machine here with the PeakBot team, the household name for automated trading. Happy Monday, Ben. How are you, man?
Happy Monday, Dillon. I'm doing good. Pretty good weekend. Can't complain, and looking forward to a short week in the market ahead.
That's right. It is a short week. Friday market is closed. Good Friday. So get your premiums while they're here. And the weather's looking really good this week.
Yeah, it is dangerously good.
Yeah, I'm gonna get out there. I'm gonna get out there. I might have blocked my calendar maybe already for a little something, little 9 holes. But anyway, lots to cover today. Sorry, I keep looking at my phone. Running a business, got a lot of things going on. We're gonna talk about stocks in real life. We're going to learn a little something. Ben's going to take us through. We're still on the vertical wheel. I forget what part of the vertical wheel we're talking about, but Ben will get into that. That's our old reliable premium collection strategy week to week on ETFs and index funds. Then of course, I'm sure we'll touch on results, maybe take a look at a few other things and go from there. Ben, am I missing anything?
I don't think so.
Okay. All right, cool. So let's get into it. For those of you, Ben, while you pull up stocks in real life, for those of you who are maybe new to the show, PeakBot is an automated trading platform. We make it super easy for the everyday person to automate your trading portfolio by connecting it to your broker, like our great partners at Tradier, and getting it automated. Ben, I was crunching the numbers with Tradier Pro Plus on what like an average 1 unit portfolio has to pay in fees on Tradier versus anywhere else. It's outrageous. It's outrageously cheap. 0 cents on anything other than SPX, essentially, in our situation. And what a help that is at the end of the year. Anyway, all right. So Ben, let's talk.
Yeah, we've got the company Beyond Meat this week that we were talking about, ticker BYND. Now, I know Beyond Meat was very popular when we were wheeling every single week because it paid high premium, and I forget if it was expensive or not. I just remember it was paying some pretty high premium. I'm gonna look up the chart real quick.
I got it up here.
Double check. Wow, it is not doing well.
I was gonna say I got it up here, and I don't remember it costing this little.
Yeah, I'm looking back. I think we were wheeling it back in like 2024 when it was trading around like $7.50, so between $7.50 and $10. Now it is in the tubes. It's trading at 65 cents. If we're lucky there. We'll look at the chart in just a minute, but this is stocks in real life. So in real life, Dillon, have you ever tried Beyond Meat?
This brand specifically, and is this sold in? The answer is no, I don't think so. Maybe. Is this sold in stores, or is this? That's what this is.
Oh yeah,
right?
it's in stores,
but like grocery stores rather. Like this is something you're picking up as a meat alternative.
You can go to the grocery store. You could find some Beyond Meat burger patties.
Okay.
And eat that.
So here's what I've said. I'm a meat guy. If you can't tell, love a good burger and love a good, everything. But I've had veggie burgers before. You can have a really good veggie burger. I'm sure Beyond Meat's got some really tasty stuff, but it's not gonna hit like any of the other stuff hits, at least in my opinion. What about you? Have you leaned in at all there?
Nah, I'm like you. I'm a meat guy. I'm gonna eat the real thing. I've tried it though. Like I've tried. I've never
Beyond Meat.
Yeah, well, I think they partnered with Burger King and maybe it was White Castle, or maybe it was both.
Okay.
And I tried those burgers. They tasted similar, but you could tell it wasn't real.
Similar is a compliment, though.
Yeah, for sure.
Wow.
For sure.
And the texture, though, like I feel like you can maybe science your way to a decent taste, right? But I don't think you can science your way to the texture. The texture's never going to get there for me.
Yeah.
That's
how it all feels in your mouth,
Do you think vegetarians will eat cloned meat? It's like, it wasn't actually part of God's plan, or maybe, okay, I'm getting a little deep, but like, maybe that's an outlier. Okay.
I don't know, because I think the whole thing with vegetarians is they don't want to like kill animals or something. But
yeah. But what if we
Oh.
also, was so lucky to have life? All right, never mind. So this is okay. Any guesses on the IPO, really quick?
2020.
Not far off. May 2nd, 2019, at $25 per share. They raised. How much do you think they raised?
How much did they raise? Oh, geez.
200.
I was gonna say $500 million.
Not far off either. 250 million. Yeah, man, they're really not doing so hot. Okay, so Ben, do you have the chart up?
I do.
My goodness.
Look at that ride. So yeah, okay. What is IPO? You said was in 2019, in May 2019. Yeah. So IPO'd. It looks like it hit the market at about $45, and then shot all the way up to its all-time high at $240. I feel bad for whoever's holding the bag then. From then.
When was that?
That was in July of 2019.
Okay. Got it.
So back in July of 2019, if you bought shares then, your shares that were once $240 in value are now only 65 cents in value. Wow.
Dang.
Wow. That sucks.
I wonder how many CEOs they've gone through.
Yeah, I don't know.
All right. Well, hey, look, unfortunately, Ben, I gotta tell you, I don't have a trade idea. I don't really deal. How's the volume? How's the option chain looking?
Well, we'll take a look at this, just shares traded. Look at this day in volume. Whatever happened in October of 2025. Maybe there was potential acquisition talk. I'm not sure. I just Googled it though. I said, why did Beyond stock drop? And it said Beyond Meat stock crashed primarily due to declining sales, persistent net losses, high debt levels, massive shareholder dilution from restructuring, customer demand dropped due to high prices and taste preference. No kidding.
The message I'm getting is we're meat eating. Are they primarily in the States? Maybe they got the wrong country.
Maybe they got the wrong country.
We eat meat here, dog.
Yeah. We do. Oh, bankruptcy. There were threats of bankruptcy. That's why there was so much volume in Q3 of 2025.
Doug says it wasn't me when it was happening, didn't touch it.
Yeah.
All right. Well, geez. Sucks for them. Let's move on.
I'm looking up the chain real quick. I'm in my Tradier account looking what's available, and man, there's it's pretty sparse.
Much, huh?
Pretty sparse. So let's say we were to go for a longer term play. Let's say so Beyond's market cap right now is about $290 million. Let's say they were able to find a buyer, all right, that was willing to buy them out.
Are you going to short meat right now?
No, I'm going to go long. I'm going to say, what if they found a buyer that was willing to buy them for $500 million? Call it $600 million. So double what their market cap is at. Where is their potential for us? So if we were to look at, let's say we wanted this to happen in the next year. Okay. Mm-hmm. We're going to look at the March 19th expiration date for 2027. There would have to be a buyer that comes in at about $1.25 per share, and we could buy the 50-cent strikes for last was 31 cents. So let's say we can buy them for 35 cents to be conservative. Would we want to do that? Because then essentially our cost would be 85 cents because we have the 50-cent strike plus 35 cents of premium paid. If there were to be a buyer that came in at $1.25, that could be a nice way to earn 50% on your cash. But you're betting on somebody coming in and buying the company.
It's a big if.
And with a trajectory like this, I don't know.
I don't see a buyer.
I don't know who is really going to be interested. Although earlier this year, Beyond was trading almost at that 125 itself, and then in December of 2025, it was trading at $1.25. So who knows? Can it double back in value and get back to those end of 2025 levels?
It's done. It's over, man.
TBD.
I want to see. I wonder if they.
This is true, Doug. Better to just buy the stock.
Yeah, you're right. All right, Ben. Let's get off Beyond Meat. Let's get beyond. Hey, let's get beyond meat.
Let's get beyond the Beyond Meat.
You ever watch the movie Click?
Yeah, with the remote Adam Sandler.
Yeah,
is that the one?
Good movie.
Yeah. Oh yeah, great movie.
Bed Bath and Beyond in the Beyond section. That's why I was thinking that.
Oh yeah, I got you. Adam Sandler's got a lot of great movies.
Sure does. All right, so where to next, Ben? Are we going to learn something, or do we want to do? I think that's right.
Yeah, let's
talk vertical wheel.
Let's go week 5 of vertical wheel. We've got one more week after this. We're going to talk about the full wheel in motion this week. I'm going to go through a couple different scenarios. I feel like we're flying today. I know this part's going to be relatively quick too, because this is a lot of review. It's a lot of review from what we've already gone through. So what happens within this bot's life cycle? Well, we're going to start by selling that put credit spread. This is, again, different from the traditional wheel, where you would traditionally sell a cash secured put and have enough cash behind that to buy 100 shares if you were assigned, no matter what the price was, as long as it was underneath your strike price. Now, we came in and said, hey, we want to put a little bit of protection on these trades for ourselves, and we want to buy a put at the 10 delta. So in the case of a huge dip, we're safe. And I think that 10 delta actually came into effect for me this last week. It did. So I was saved from further losses on my TQQQ position because I had that put. As we know, the market's been dropping pretty much every day for the last several weeks. So it's nice to have that put hedge. It's also worth noting that when the market's trending down, that's probably not the best time to trade the wheel strategy. Of course, to each his own.
SQs.
You could trade the SQs, yes.
Dude, it's paying pretty good right now, man.
Are you trading it?
No, but I was on with a trader who is, and
okay.
It's won the last few weeks, but it's who knows now. These don't last long, so that's where it gets scary. Anyway, sorry.
Yeah, for sure. So if you're selling that put credit spread, you're going to collect credit. You're going to collect premium. And if you win the trade, you, of course, keep all of that, and then you just repeat the process next Monday. However, if you get assigned shares, the next week we're going to sell that combo spread that we spent last few weeks talking about, where we're going to sell the same strike that we were assigned the shares at, and then we're going to continue to buy that 10 delta put. And if those shares get called away, and then you start the whole process over. So it's a cyclical process, which is where you get the name wheel from. Now, these are a couple different scenarios, all winning, by the way, because why would we talk about a losing scenario? Scenario A, let's say everything goes according to plan. These are all 4-week scenarios. So we trade SPY all 4 weeks. We collect pretty much the same premium all 4 weeks, which typically is the case. We'll kind of collect around the same amount of premium each week. There are a few factors that could change that, but we won't get into that right now. On a perfectly nice month, we could make about $1,000 wheeling SPY. Can't complain with that. And that's, what we like to see in a bullish or neutral market. Now, what could also happen is you get assigned and you recover from that assignment. So this is we'll call it not so perfect month, where sure, maybe we get a win at first. Week 2, we get assigned shares at 582 in this example. And then let's say SPY rallies back to 585. Well, the shares get called away because we sold the 582 call. Remember, we're going to sell the call at the same strike that we were assigned at. And then let's say that combo spread for us that week only earns us $90. Okay, we only earned $90, but we were net zero on our shares, which is the important part here. And then let's go back to normal for the final week of this 4-week stretch, still making $585 for that week. Again, not too bad. I'm not going to complain about that. If you think about that in terms of how much cash you need available to trade SPY, you need about $65,000 at the moment. What's SPY trading at? I'm gonna look at
close.
SPY's at 640. All right, so yeah, you need like $65,000 in your account. So that's almost a 1% return still in a month that things didn't go perfectly according to plan. And then scenario C, the extended assignment. And this is what did happen to TQQQ, although we ultimately came out at a loss because that put contract came into effect. So let's say week 1, you get assigned. Okay, well, you still collect premium that first week. Week 2, you're still holding those shares. You only get $50 because SPY dropped further below your strike price, and you're not collecting as much for the 580 call. And let's say SPY keeps dipping, which it's currently doing right now. Week 3, you actually lose money. Not that you lose money, but you're paying into that put contract to protect yourself from further downside. You could offset that a little bit with the credit that you're getting from the call, but it's likely not going to be enough to cover the entire cost of the put. And then let's say week 4, SPY rallies. Once again, historically, when you look at this strategy, you're kind of betting on the market going up and to the right, which it, again, has historically done in the past. That's how this strategy thrives. And then let's say you get your shares called away. Again, the shares, we're going to try to net out at 0, and we are collecting premium, we're paying premium along the way. And that nets us out at about $250, assuming we collected $250 off the bat, which was the case in the previous examples there. So those are 3 different scenarios how your month could look. Of course, we want scenario A every single time. That's what's going to produce the best results for you, and you're going to get scenario A in a fully bullish market. If we just had a completely uptrending market, like this is what we would see. Things are a little choppy right now. Things are getting a little dicey. So Dillon, as you mentioned, somebody's trading that is trading SQQQ. That's the inverse of TQQQ, the 3x leverage on the Qs. That's definitely a strategy. If you trade inverse ETFs, when the market's going up, those ETFs, when the market's going down, those ETFs go up, which make them a good candidate for wheeling. The tricky part is, when are things going to turn around? That's just something that we don't know.
Here, look at this. You mind if I take over for a second?
Yeah, go for it.
Just while we're on SQs. So this is obviously the market this data will update when the market opens this morning. But, these are all ETFs here, and you can see everything's bearish. Okay, gold is neutral. All right. Yep. Gold's just hanging on. But SQs is the only thing in the green here, obviously trending bullish in this bear market. Although volatility is very high, at least compared to the other opportunities on the watch list here. But you can see it's trading around $87 a share, at least it was when the market closed Friday, earning $124 in premium. That's pretty fat, right? 1.5% a week is nice, and affordable in a lot of portfolios. And the spread's not too damaging. It's a $6 spread, so your max loss is $476. again, I think if people have been trading this SQs the last few weeks, they've been cashing in. You know,
Oh yeah,
I don't know that, but it certainly seems that way. Yeah. So anyway, okay, cool. Sorry, Ben. Go ahead.
No, all good. I'm tempted to switch over to SQQQ right now, but I know that the week that I do that, we're going to turn around and
But
TQ.
really, the week you want to know why you think that? Because honestly, the week you added TQs, it just.
Do we?
Didn't you start trading at $50 a share?
Yeah.
What did you do, man? You sunk us.
Yeah, I did. It's all my fault. Do we know anybody that's wheeling TQs and SQs at the same time?
Tell me why. Tell me how. Tell me.
I just want to see what that's netting out to.
Because I guess there's still room, right? There's still room for both to win.
Yeah, if
the market isn't going too far, and right, if we're getting a relatively neutral market or range bound, we don't want to call it neutral. I don't know. That's tricky.
Yeah, I think that would be equivalent to like selling an iron condor. Put credit spread on both TQQ and SQQQ.
Your head like this right now. I could see.
Yeah, it is. I think that's the equivalent of selling an iron condor.
I guess it is.
Within a range, we're good. If we go too far in either direction, then one side's going to lose.
However, the legs or the wings, are different widths on it, right? Because they're definitely different.
Yeah. They are.
Okay. Sorry. Go ahead.
Anyways, here are the key takeaways, and then we will move on to the final segments here. So win streaks compound. Of course, we saw that in scenario A, where at least with these numbers, you can make over $1,000 a month wheeling SPY. Now, it is capital intensive to do that. Realistically, you only need that capital if assigned shares. Otherwise, you only need enough cash to cover the width of the spread minus your credit earn. When you do get assigned, that slows you down, but it doesn't break the strategy, right? There's a reason why. I'll say millions. I think millions of people are wheeling. There's a reason why millions of people use the wheel strategy, because over time it kind of plays itself out, and it proves to be a sound strategy. Your protection never stops, right? Especially with this version of the wheel, it's always going to trade that put contract. It's always going to give you that protection to the downside, and then the wheel always comes back. We should have like an asterisk or caveat or whatever. But shares do get called away eventually, whether it's because prices dropped below your long put, or because prices increase above your sold call, and then you're going to just start that cycle over again. So next week will be the final week of the vertical wheel strategy. I don't know what we're going to cover after that. We'll come up with something and figure out what bot we want to cover next. But we'll talk about risk and running this live. What does position sizing look like? What types of accounts do you need? How does the bot handle scenarios? What should you as the user handle in certain scenarios? Of course, not financial advice, completely up to you at the end of the day, but we'll just be talking through different types of scenarios. So make sure you tune in next week to get the final information that we've got to provide on the vertical wheel.
Awesome. Thank you so much. All reliable in the vertical wheel there. Been around almost as long as we've been around, at least with PeakBot. We had a year and a half before we started wheeling. We were wheeling and dealing in equities. Momentum. Man, those were the days. What were we doing? We actually had no idea. We had no idea what we were doing at the time. Ben, we really don't talk about it much, but we really are some of the OGs in this industry. I mean, this automated trading it's still new, I guess, to many, but for those who've been around, Doug knows.
Compared to the rest, I mean, we've lasted.
We're here. It's not easy to survive in this game. Helps when you got strategies like King AI and King AI Turbo returning over 200% in 4 and 6 months respectively. That helps. I'm sure Doug, come on, wait for we got. Oh well. All right, Ben. So look, I can talk to people about our results, but you can also just go to our website, peakbot.com, and look at our results. They're fantastic. All of our bots, okay, the wheel's struggling right now. Shorebo's touch and go, but can be very hot if you know what you're doing. But BenBot, King AI Turbo, all have been slamming. And I shouldn't be hating on the wheel. Again, it's just a bear market right now. If you're smart, you're not trading the wheel unless you're on SQs like you
Right.
said. So, and our partners have been crushing it. BTF, shout out to him again. Bull Trade Finder continues to crush it. Some very exciting things coming. I know E2T has been consistent in grinding. Our Lissa over there. We got some stuff coming with Trendy John. So keep in touch. Head on over to our bot shop if you want to check out all the people we automate for. Ben, hit me with economic events.
Cool. All right, let's do it. So what do we have going on today? We've got Jerome Powell speaking today, and he's speaking at, I think, at some sort of school today. Nothing major impacting on that. Now, we are in a King AI Turbo position. We are not in a King AI position. So on Friday, Turbo decided to trade. Standard decided to not trade. So we were in a position here. I'm curious to see whether the bot thinks we need to get out before this speech. I'm going to let it happen if it does, but I'm curious to see what will happen there. But looking at today going into tomorrow, from everything that I can see, we will be getting a trade from today going into tomorrow. Tomorrow, there is jobs data at 10 o'clock. Trading View says it's high importance, but doesn't really impact our trading. And then Tuesday into Wednesday, as long as volatility is within range, we will be trading. And Wednesday into Thursday, again, the same. And then on Thursday into Friday, I just realized this. So, okay, markets closed on Friday. We have non-farm payroll on Friday. So Thursday going into next Monday, the long weekend, pretty sure everything's going to be off because of that long weekend. The non-farm payrolls, unemployment data, all coming out on Friday. So we'll look for a nice, quiet Easter weekend and not be in any positions unless our ML models decide, hey, we're going to trade. But I don't think that's going to happen.
All right. So, by the way, you're right. So I have one account trading Turbo, one account trading Standard. Turbo's in. You want to see the position really quick? I got the lines.
Yeah, I've actually got it up if you'd rather that.
Hit it. I don't care.
All right, let's get this back up. So these are our strike prices in green here. The call credit spread sold the 65.35 strike. So we're pretty high up there. And then the put side sold the 61.85 strike. That's
a lot of room.
That's a wide condor. I think the total premium collected was what, $170?
I gotta look again, but that sounds right.
Yeah. And it looks like futures are up about $55 pre-market. So I would expect to open up, I guess, right around 64. What did I say? $55. Right about 64.30, call it. So right around this range. So we've got some room. We'll still have 100 points to the upside for whatever J Powell says to blow us through. If the bot doesn't decide to exit before then. But really wide condor. I didn't hate the trade. I thought when I saw King AI Turbo was trading, I was not a fan, but I didn't hate the trade when it was placed.
Coming off a loss as well.
Yes.
That always makes me feel a little bit better. All right. I mean, again, I know.
Different with Turbo.
Not since live. Just saying, since live, we haven't lost 2 in a row. So that's all. That's all I'm saying. All right. So, yeah. Let's hope for a relatively, simple day if you're a King AI Turbo trader without too much movement, but we'll see. We got room. All right, Ben, anything else here? Oh, I still got the vertical wheel banner on the bottom. That's
rookie move. No, I think that just about wraps us up here.
Okay. Awesome. Well, thank you so much for tuning in. As always, we'll be live. No, we won't be live on Friday. We will not be live on Friday at noon. We'll be live again, same time, same place next week, Monday at 8:30 a.m. Eastern for episode 220 or 221. We'll see what happens of Man and Machine. And yeah, thank you so much for tuning in. We'll see you at the peak. Take care, everybody.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.